Apollo, a lot of conjecture out there about who wins the election and how that will impact different stocks. For example, some say if Biden wins, you'll see a big pump into alternative energy and building. Where if Trump comes in, they say maybe it'll be the coal, the steel, and the oil industry that will be best. Based on this sort of mixed message that goes out there, what is the best strategy, is often asked of us, to go ahead and sort of look at the election and how we best should position ourselves?
Yeah, and that's a good point. I mean, I think it's a good line of thinking because not only what should I make a move here that actually would benefit my portfolio, forget about losing, but what can I do to benefit? And there's certainly a lot of analysts to do it. The first thing that I would tell you folks is that all these expectations about what a company might do given on each presidency, this is known to every single market participant out there. This is not something that if we had thought about it and nobody else in the world, maybe that could give you an edge. But the reality that everybody's looking at the same poll data, everybody's looking at the same policies, everything is known. And because of that, the prices of these companies today reflect already those expectations that, hey, if we have President Biden in office, that will lead to maybe a growth in some area or the other. But I think it is also important to kind of look at the natural experiment that we've had the last few years and just, without judgment at all on the policy being good or bad, to see as an investor, what was the outcome of having a government who's really supportive of certain industries. And we know that for the past 3 or 4 years, the government has been extremely supportive of about three sectors that are really is no secret to anybody. They've made no secret. And in fact, again, it's a priority. I'm not saying it's good or bad at all. It's just looking at the data. And we know that fossil fuel, coal, and stainless steel were high on the priority agenda for the administration. And in that respect, the question is, how did those industries do when you have friends in high places, when you have an administration supportive of those sectors of those industries, and to do that, I mean, you can start with coal. When you look at coal and you take a company, you can look at all the coal companies, but certainly hasn't been a great growth in the coal industry, even though the support. In fact, it's been once again it's been in decline. But look, you take oil, fossil fuels, and again high on the priority. How did energy companies do? And to take one of them as an illustration, look at Exxon. Exxon, which is the largest, was the largest company in the market 10 years ago. You look at the last 3 or 4 years under the current conditions, and it lost half its value, even as the market has been going up. And it's not to say that the administration had anything to do with this. That's exactly the point. It had nothing to do with it. There are other bigger things in the world that might drive the price of Exxon, the stock price down. But it didn't mean that if you had that knowledge, oh, we're going to have a new president supportive of Exxon, that will translate, or not Exxon, but the energy, the fossil fuel industry, that did not translate into great success for you as an investor. It just didn't. What about steel? We had tariffs put in place, and when you look at U.S. steel and the price per share of U.S. steel, it's remarkable because at some point we know there were tariffs. Well, this is when the tariffs came in, and if you look at the early 2018 and what the tariffs meant to the stock price, there was a little bump for, but by the time the steel tariffs were imposed, ever since then, it's been a downward trend in the stock price, even as you have these tariffs in place, even as you have the support of the U.S. government. So in that respect, again, it comes back to the same thing, that there are other things moving the market, and the politics and the policies don't get carried away because it does not translate into success as an investor. And the opposite could be true. If you look at companies that really are not, supported, like you talked about Joe Biden being supportive of more renewable energy, and in that case, from an environment perspective, you think that electric cars would be beneficial, and certainly that hasn't been a priority. And we know that at the end of last year, in fact, there was a tax rebate that was taken off the table, and that was really supporting sales for Tesla, for example, and GM. and as the article points out. But what's interesting is that at that point you say, well, this can be good because you really don't have an advocate there to electric cars, particularly when some of these taxes get cut. And yet at the same time, since this tax was removed and was taken away, the Tesla stock price has been going up. And in fact, it's up over 400% since then. So again, it kind of goes to show that there are other things driving the market and stock prices rather than who's in the White House.
Again, thanks for being with us today, and please follow us on all our social media platforms: Twitter, Facebook, Instagram, and YouTube. We look forward to seeing you on the other side.